Hi guys, welcome again to part 2 with Norbert and Daniel. We'll be covering a significant bit of trading psychology, risk management, and of course their individual observation of the future in regards to financial markets.
Yeah, so for me, I think over time, I've noticed that, traders tend to despise some of these events. And for them, all they wait for is the data. They don't really get down into the main, like for instance, I can say now like the CPI. If they release CPI and they're saying CPI year over year, for us, we are waiting only for the release. We are waiting for the number that is going to come out. But there are many other things that may affect that number. Because when they release a CPI number and immediately after you have Biden speaking and he's saying that disregard the number you've received, inflation is okay, we are having it under control. So for you, you'll be on your chart there saying, now let me buy Euro USD. It's okay. But then you're forgetting Biden has just spoken.
Yeah.
So much as technical analysis, of course, that one, I don't have to go into the technical analysis.
Yeah.
It has to be done because fundamentals, they move the market, but prices have exhaustion.
Yeah.
And that's when technical analysis comes in.
Any addition to that, Daniel?
Just on the experience that I had with fundamentals, they also took me badly. Several times.
Every trader.
Several times, not one.
During Trump era.
Meanwhile, the $400 account went.
Okay.
Within about 3-4 minutes, it was gone.
Yeah.
So I looked and it was $0. Yeah. Then that's when I rushed to my Gmail to write to the broker.
So after that, since then, I hope you use stop loss.
I'm a scalper.
Okay.
But
so you manually control your positions.
I manually control, and currently I'm actually working on an automated strategy.
Coding.
Okay.
I'm actually coding one, and it's a project which is going to take some time.
Okay.
But for me, I feel like what would be my most important thing would be to just completely leave the charts and let my strategy do its thing.
Nice one that you have gone to there. And I meet a lot of these questions a lot from traders. Which bot, how can I automate it? And I think by the time you decide to at least automate, you understand why you want to automate it, right? I believe for you it was because the risk aspect of it.
Yes.
Have you ever tried using a bot, Norbert?
Exactly. Have bought a bot from USA.
How did they work out for you?
They could work, but they could brown my account. They worked, but at the end of it, the account were brown.
Okay. So would you recommend that to a new person, or you tell him, first of all, learn the basics? Because I think using a bot and you're a beginner, it's like going to sprint and you haven't learned how to walk.
Exactly.
You don't know how fundamentals work.
Very true.
And I think if you use it at least at the beginning, with even a $10,000 account, we will have your $400 story. You don't know what happened. And if you go to your trade history, you just pull it out for the day. You're seeing 1 lot size, 5 lot size trades, and everything is just thousands and thousands of dollars in red. So
I would recommend before someone buys a boat, should be well experienced with the financial markets.
Okay.
Why do people use a boat? Boat is integrated using someone's idea, the trading idea. For example, as I said, that I trade volumes. I trade at the opening and the closing of the session.
Okay.
Okay, and I look at the total volume in the market as well.
Yes.
Every morning.
Yeah.
So if I'm to integrate a bot, I have to use the same idea I have. Okay, to integrate coding.
Okay.
Using my idea.
Okay.
So for it is going to be there. A moment it is discovered, this trade has considered all the terms and conditions for me to execute. Is going to execute even if you are driving, even if you are sleeping, is going to do so, and at a given time.
Okay.
So I would advise a trader, first of all, to learn before you buy a boat. Because what we used, for us, we could buy a boat because we wanted money. We never wanted to learn. Just buy, boat, then integrate in a MetaTrader 4, MetaTrader 5, then you launch trading.
Okay.
You don't know what time is the news and what will be the impact. You don't know. So the boats were okay, and the boats works for people. because I'm quite aware there are a big number of successful traders who are just using bots. They have integrated their idea into a system that is EA, that it works for them for a couple of time now.
Okay.
So bot is best for those who have already learned and they are aware of the financial markets.
Now, in the education journey of yours, have you maybe ventured into training people how to trade?
Yeah, I have done it.
Okay.
And even now I'm a trainer.
Okay.
But unfortunately, I got much more of administration issues.
Okay.
So I could not proceed with the training.
Okay.
Yeah.
So in regards to Uganda and the youths, I think we mentioned something about some jobs and everything, right? Mm-hmm. So obviously this person has the knowledge and you lack the cash. And I think this is a very important balance of, it's like balancing, opportunity and the opportunity cost, right? Yeah. How do you mentor such a person, at least for but given that at least you have engaged in some trainings and everything, do you tell him, okay, go and look for money first and then we can begin? Or how do you basically get this person until you say, okay, this person is done with the preparatory school, is ripe for now live markets? What do you use, at least in your training journey?
I think since trading is done on the platforms, you know them, MT4, MT5.
Yes.
Then also the equity trader,
yes,
and the FX trader, which I'm familiar with.
Okay.
And I think the most important thing is to first do demo trading.
Okay.
I think traders need to know that trading really, you can do trading anywhere. You can do trading in the bathroom. You can do trading in traffic jam. You can do trading anywhere.
Yes.
And there is no rush. No one is chasing you. That you need to put money and start trading. Practice, practice, practice.
Okay.
Regarding how much money to start with, you don't need that much money to start with. Of course, there are other things that are important, like how much money you want to make, because that then determines how much money to start with.
For you, now that you mentioned how much money to start with, now when you at least say you are quite conversant with the markets, you know what you want, you know how it works. Do you look at how much you want to make, so that when you trade, you are saying by the end of the week I need to have closed in 500 pips, or you look at the market for opportunities, then that decides this is how much I will.
You cannot determine to them. You cannot tell the market how much money you're going to make, because that won't happen. The market, you will not. You most probably should not focus on how much money you're going to make.
Yes.
I think you should just let it flow.
Okay.
You need to focus on your trading plan first of all.
Say you have traded, I believe, over 3-4 years consistently, right? Do you look on your
on and off?
On and off,
Yeah.
What is your off time in the markets?
For me, off time was during COVID. That COVID year, it was a rough one.
Okay.
Had a rough patch. Because there's a family member of mine who I had to attend to for close to a year.
Okay.
So by the time I got back, of course, when you get back, you don't just get back into opening 10 lots, 5 lots. You get back into seeing, what's been happening.
Yes.
Generally, what is going on in the markets. Read up a bit on the news. Do a bit of technical analysis and see what really is driving markets currently.
Nice one. So sometimes maybe you've blown your account. This is a question to you, Daniel. You've blown your account. Do you stay off the markets until you get the cash, or you keep yourself? Or you even do a post-mortem, why did I blow my account? Because for me, I do. I try to understand, why did I get myself in this position?
Yeah. Just as I've said, there's that feeling when you lose. But you have to identify, why did I lose? What was the mistake? So all of the thought comes when you are resting. You are out of the market completely. Then, before I get back, I have to know the reason. If I identify the reason why I lost, of which automatically the first reason would be I didn't use stop loss. So the next time when I put my money, I have to make sure every position has what? A stop loss. Then the second, if that I never use the stop loss, then what was the mistake? Did I have early entry or late entry over this position?
Okay.
So when I discover all this, then basically I will not accept again to lose money. I can only accept to lose partially. Like if I'm risking 1%, 2%, or even 10% of my capital in case I'm a high risk taker, I'll only accept that, but no more blowing their accounts.
Okay.
But I even don't know how I used to blow the accounts, because I'm even given all.
I know all of them.
Yeah.
I'm given
Brexit, Trump, Trump tweet,
Yes.
any Trump tweet
Yeah.
on a very sunny afternoon.
Yeah.
You just decide, okay, let me go to
the news now.
Not even to the news. You
Goes to tweet.
you have done your analysis.
Yeah.
And you're okay. Charts are trending, and then you're just relaxed, maybe with your friend somewhere, enjoying the sunset.
Yeah.
Okay, today I'm going to ban Chinese imports of soy meal, and we are imposing tariffs on steel. Gold does the thing.
Yeah.
Dow Jones
Spikes.
drops like hot potato.
Yeah.
And you see your account in a very nice 0.00. Some of these things, I think they are very heartbreaking.
Exactly.
And in investment, and you don't want to do that.
Sure.
So I think for me, what I learned is sometimes you can never, I think I like what you said, you can never tell the market what you want to make, but you can control what you may lose.
Yes.
Yeah.
Exactly.
And I think what I also learned, when you are making some profits, always, I don't know, I know most of the traders do this, at least those who are experienced, but for the newbies, I think with your demo account practice and everything, you should be able to get there. Raise the stop loss, at least either at the entry price or a little bit higher, maybe 10, 20 pips above the entry, so that you lock in the profits. At least whatever, because in your case, it might not be you don't know what happened, but some fundamental event happened and therefore affecting the position. Now, for a trader who is 9 to 5, does something else, maybe a surgeon, doctor, engineer, teacher, I think a stop loss would work for them.
Exactly.
Yes. Now, there is the other aspect, trading psychology. What define it, at least in your own understanding, because I think I've mine.
Trading psychology, this is the hardest part. This is the hardest part into this industry.
Okay.
You can be a good trader, okay?
Yes.
But when you lack trading psychology, then you are not profitable.
Okay.
You'll never be a consistent, profitable trader, and you even skip out of the market.
How does that come in, at least in your own experience and
my own
observations?
experience, first of all, trading psychology defines someone before you go in the market. You have to consider the risk you are taking.
Okay.
And when you discover the risk you are taking, take out the feelings.
Very easy to say, hard to apply. Yeah?
Okay, take out the feelings. Let's say you were trading in a position and then you hit stop loss. You risk 5%, you have $500, or 10% out of $500. That's the $50. Then, if you have a poor trading psychology, you will be forced again to re-enter. Why did I lose? No way, I have to get money out of this. You get in again. So when your risk, your trading psychology is better, you are good at it, you'll always relax and leave the market to breathe. You also considering the fact that you have to know, why did I hit stop loss on these positions?
Okay.
I can say trading is hard, but it's hard only when you treat by your own feelings. But when you open a position and you leave the market to behave the way it is supposed to, then you always like Forex and you'll be a consistently profitable trader.
Nice one. Now, Norbert, as we go away a little bit from trading psychology, there is always this conflict between, now you're making $10,000 in a month, yeah? And you want now to quit it, you want to enter into it full time, right?
Yeah.
Is that something maybe you would recommend to somebody who has been trading, let's say, for 1 year, or what are some of the conditions yourself would consider before you say, okay, I'll be doing this because it will be my bread and butter?
Thank you, Jesse. Do not leave your job to focus on trading.
Okay.
Especially if you've been trading for 1 year.
Okay.
There's no investment advisor who will recommend that to you. Even if you go and you pay lots of money to get investment advice, they will not recommend that to you.
Yeah.
Trading you should not trade from an aspect of a need. You have money that you need to trade. You have money that you need to pay, you need to trade.
Rent.
You have rent to pay, you need to trade.
Yeah.
That
School
is not
fees.
how school fees or anything that is immediate, is an immediate need, should not come from trading.
Okay.
It can come from trading over time, but not immediately.
Okay.
There has to be money, and like you've put it, Jesse, you are saying this is someone in a full-time job, and they are considering whether to leave full-time job to trade. It's better for you to have that job and trade as a side income.
Okay.
To increase how much you're making.
Okay.
I've read a few books. There's a good book by Gary Dayton.
Yes.
He's a clinical psychologist, but also a trader.
Yes.
And these people are still in their practice in their different fields. I know a few people who are architects who are also trading, but they are still going about there.
Okay.
Yeah, and it also really depends. The market is open depending really.
24 hours, 5 days
like
a
you
week.
said, which is also a risk management thing, is you're not supposed to be in the market the whole day.
Yes.
Yeah.
Only get in when there's an opportunity for you, or maybe when the market is telling you to get in.
Yes.
And when it gives you whatever it's giving you for that day, you can still get in either 2 days after, the next day, depends on you.
Okay.
But there's so much that you can do. Trading is not an escape from poverty, guys. Yes, it can. You can actually make it big, but you need to be very careful on the kind of money you're putting in and where you're getting that money from.
Okay.
I would never ever recommend someone to get money from a loan shark to put in trading and try and make it big.
Yes.
Borrowing money from a friend could spoil a relationship with that friend to put money in trading.
Yes.
Get money that you risk to lose. That disclaimer is always there.
Yes.
Put money that you... and by the way, just to maybe give a bit of context to that, when you're putting money to trade, it does not mean that you're going to lose your money.
Nice one.
Yes. It is just telling you that if you're getting into trading to like slots, or like getting to it as though you're thinking in the evening, I'm trading right now, but in the evening, man, I'm going to go shopping, I'm going to do this, you get with maybe $1,000, $5,000, depends really. You're most likely going to torture yourself.
I think it's more like starting a business.
Yes.
You are never sure if your product will be bought in the market.
Exactly.
But if you package it well and you assess all the available risk and obviously what is happening in the expected, let's say, pool of potential clients, then people by referral, people by reviews, they'll be able to appreciate your products. And in the context of the market, the hours of maybe watching Rufus webinars, hours of reading books, maybe should add something from it. Maybe any words of advice or obviously your view of the markets, at least for the year 2023? Specifically on gold, do you see it hitting 2100, 2500? Because early in the year I was reading a report of a couple of traders from CME on gold review. They were talking about 2500 based on inflation, higher interest rate. Or that doesn't concern you so long as you see something in the market, you are in and out?
I take the advice in a positive way. In case it happens,
You'll be in there.
I'll be in there since my as long as I see an opportunity, I'll buy. Even if we're going to 30th, I'll buy it.
Okay.
But I'm not 100% of what they say that it will happen. As you know, the market, it has its own say.
Yes.
Human being has their own feelings, and the market has its own way how it behaves.
Yes.
So in case that there is that kind of price movement, then probably we are going in. Since we are just a position trader. day trader. Yeah, we can do that.
Nice one. Now, you mentioned something earlier. I think I just glossed over it. When the news come out and maybe a trader would like, is it advisable? This is a new person getting in.
Yeah.
I know you have some background in finance. Sometimes you are busy. Maybe you're rushing, you are scrubbing on to go to a surgery.
Yeah.
You don't want to see what CPI of all this detail is, right? But I think for me, I normally say just check on the time. That will be the time when it affects your position.
Exactly.
Not for you to know.
Yeah.
Because as we speak today, inflation in UK is at 10 point, right?
Yeah.
Typically that would be bad for the currency, but the opposite has happened, right?
Yeah, exactly.
So I think over time you get to realize that news does not necessarily translate to how it's expected, but traders react and digest that and apply it at least differently, I believe, right? Yeah. Any word of advice, of course, as we wrap up this session?
Yeah, I think just maybe to add to what you've said, what you said about theory will tell you that when the economy is generally bad for a currency, then that currency should depreciate. But it does not mean if CPI comes out today, in day trading terms that is, if CPI comes out higher, then you're just going to go and say, man, sell your GPP quickly, money. Yeah, sometimes there will be many other things that are feeding into the price of that pair. And eventually it will play out. For the outlook for 2023, I read the JP Morgan 2023 outlook. And generally this year, there's a lot of fear in the markets. There's a lot of fear in the markets. I think you've been seeing what's been happening with recession. Jesse, you've mentioned inflation. Generally, financial conditions are very tough, especially in the West. And what I can advise traders is keep to your strategy. It's important to have a trading plan, of course. Have journal whatever it is you're doing. Have a notebook that you always move with. Record your trades. And really have like a daily ritual of how you go about your trading. If it's news that you read. If maybe, for instance, that there's a particular website where you're reading off your news and it has helped you to make money with news trading, stick to it. If Jesse is trading a certain way and I'm trading a certain way, I shouldn't try and if what's working for him is working for him, then I should look for something to work for me and stick to it. It's not really that hard to make money. Just keep to the simple things. If it's working for you, keep to that. If you someone else, you know where it's working for that person, learn from them. If maybe that's not helping you, then look for ways. There's so many resources. You can go online, look for economic news, practice technical analysis, simple things like support and resistance, simple things like open, close, and high of the day. Those are things that reoccur every single time in a market that you can use to make a quick buck in a market. Depending on how much really you want to make.
Maybe also to just add on what Norbert had just said. Another thing that Forex trader you'll make money out of passion. You have to love what you're doing. Don't do it because someone else is doing and is making money. Just love what you're doing. You'll always be perfect.
In line with the books we are sharing today, and I hope the listeners will appreciate this Candlestick Bible. What is the other book you shared?
It's a book on trading mindset. By a gentleman. He's called Gary Dayton. He's a clinical psychologist, but he's also a day trader.
It's quite big, but
I think we'll share the link.
Actually, just maybe to help traders out there, there's that book is part of a series of books. If it's a free book, you can access it for free. That's the ebook. That is when you go and search Wiley Trading Series. It will bring for you all the books.
Nice. For me, I'll just add one book, and it because you mentioned passion, it just popped up in my mind.
Passion is important.
Masters of Business by David Rubenstein. If you're familiar with him, he interviewed all the hedge fund managers in US over a period of time, and obviously Africa as well, in different sectors of the industry. And I think what is quite clear and unique and popping out so loudly, obviously consistently learning, reading everything, but more importantly, they just love what they do. Like you find them waking up every day from 5 a.m. and he's 90-year-old billionaire doing whatever he does. Even if you listen to Ray Dalio, they do the same thing over and over. So they enjoy the challenges you get every day. Just make sure that you hedge your risk appropriately. I think that is a very interesting lessons we have had there. I hope It might not magically change your trading, but it might add one or two features at least to your investment plan. Should you have any follow-up question, concern, addition, feel free to share on the social media platforms we have. I'll be glad to cover it, of course, in the next episode. I've been your host, Jesse. I hope that international flight as it docks back to Kenya should allow you to be at least 10% more financially literate. Adios.